Welcome back to Improve Your Money, the channel that equips you with the knowledge to enhance your financial well-being. In today's video, we're exploring the concept of diversification and its impact on your investment strategy. Diversification is a powerful tool that can reduce risk and enhance returns. We'll delve into the benefits of diversification, strategies to implement it effectively, and how it can optimize your investment portfolio. The benefits of diversification. Diversification offers numerous benefits that can positively impact your investment journey. By spreading your investments across different asset classes, sectors, and geographical regions, you can reduce the impact of market volatility and potentially increase your returns. Diversification acts as a risk management strategy, providing stability and resilience to your investment portfolio. When one investment underperforms, others may compensate, resulting in a more balanced overall performance. Additionally, diversification allows you to tap into different growth opportunities and minimize the potential negative impact of a single investment or market event. By embracing diversification, you can enjoy the potential benefits of a well-rounded portfolio that can weather different market conditions. The role of asset allocation. Asset allocation plays a vital role in implementing diversification. By allocating your investments across different asset classes such as stocks, bonds, and real estate, you can achieve a balanced and diversified portfolio. The principle behind asset allocation is to spread your investments based on your risk tolerance, investment goals, and time horizon. A carefully designed asset allocation strategy can help you manage risk while seeking growth opportunities. We'll explore the key factors to consider when determining the optimal asset allocation mix for your investment portfolio. By understanding the role of asset allocation, you can construct a portfolio that aligns with your financial objectives and risk appetite. Diversification within asset classes. Diversification extends beyond asset classes. It's also crucial to diversify within each asset class. In this segment, we'll delve into the importance of diversifying within stocks, bonds, and other investment categories. Within stocks, for example, diversifying across different industries and company sizes can reduce concentration risk. Similarly, diversifying within bonds by considering various types, durations, and credit qualities can enhance stability and income potential. We'll explore the concept of diversification within asset classes and provide practical insights on how to achieve it effectively. By spreading your investments within each asset class, you can further mitigate risk and enhance potential returns. Understanding the benefits of diversification within asset classes is essential for building a resilient and well-performing investment portfolio. International diversification. In today's interconnected world, international diversification has become a powerful tool for investors. By expanding your investment portfolio to include assets from different geographical regions, you can tap into a broader range of opportunities and potentially enhance your returns. We'll explore the benefits of international diversification, such as exposure to emerging markets and access to industries not available domestically. We'll also discuss considerations like currency risk and geopolitical factors to help you make informed decisions when incorporating international investments into your portfolio. Get ready to explore the world of international diversification and unlock the potential for global growth. Regular monitoring and rebalancing. Congratulations on diversifying your investment portfolio. However, diversification requires regular monitoring and rebalancing to ensure its effectiveness. In this segment, we'll explore the importance of staying vigilant and proactive in managing your investments. Regularly reviewing your portfolio allows you to assess its performance, identify any shifts in market conditions, and evaluate if your investments are still aligned with your financial goals. We'll discuss the significance of assessing your investment objectives and risk tolerance periodically. By understanding your evolving needs and preferences, you can make informed decisions about adjusting your portfolio. We'll also uncover strategies for rebalancing your investments, such as selling overperforming assets and reinvesting in underperforming ones. Rebalancing helps maintain your desired asset allocation and risk profile, ensuring that your portfolio stays on track. By actively monitoring and rebalancing your portfolio, you can adapt to changing market dynamics, seize new opportunities, and mitigate potential risks. Stay tuned as we equip you with the tools and knowledge to effectively monitor and rebalance your investments, ultimately optimizing your portfolio's performance and increasing your chances of financial success. Conclusion. Congratulations on completing this insightful journey into the world of diversification. By understanding the benefits of diversification, implementing effective asset allocation strategies, and embracing international diversification, you've gained a valuable tool to optimize your investment portfolio. Remember, diversification helps reduce risk, enhance returns, and provide stability to your investments. Don't forget to subscribe to improve your money for more financial insights. Stay tuned for our next video, where we'll delve into another exciting topic in personal finance. Your financial journey continues.